Hi there, welcome to Kneppy Invest. Yesterday, on the 27th of August, I did a video in regards to one of the most important parts of my investing checklist, and that is looking for companies with at least 10% revenue growth. Now, I'm not talking about 10% revenue growth just in 1 year, I'm looking for the longer term. So, best way to look at that is a compound annual growth rate in revenue of at least 10% over a certain period of time. And the longer that period of time, the better. So what I'm doing with the financial year 22 results that are being released, most of them are a full year. We're also seeing some half year results, but what I'm doing is I'm looking at the 1 year revenue growth, and then I'm also looking at 3 year, 5 year, and 10 year revenue growth. And I'm really honing on those companies that show a consistent growth in revenue over a period of time. And one of those companies, and the first company I will do a video on in regards to this, and I suppose this is probably the first video in this series, and that company is Altium. Now, the market reacted really well to Altium's results. In fact, the share price increased 20% on the day. So I thought this would be a good company to look at. Now, I personally don't own this company right now. I have been a shareholder in the past, and we had seen this company's share price and valuation increased significantly from about 2012 to about 2018-19. But over the last few years, share price has really not gone anywhere. And you'll see the revenue over the past few years had not gone anywhere until this year. So again, it's very important just not to look at a few years in isolation. You've got to have to look at the whole picture. Now, onto the results for Altium. These are the financial year 22 results. Share price at the end of trading on the 26th of August was $36.49. And I expect that share price to be significantly lower on Monday because the American markets were down big. And when I say big, NASDAQ was down 4% on the Friday, or because the markets got a little bit freaked out that the Fed and Powell are still thinking about raising interest rates to decrease inflation. And this shocks me that the market was surprised by this because the Fed has two mandates. The first mandate is full employment. The second mandate is price stability. We have full employment right now. So they're wholly focused on price stability. And inflation, or high inflation, is not price stability. It's the complete opposite of price stability. So their full focus is on decreasing inflation. And the best weapon, in their opinion, to decrease inflation is raising interest rates. So they'll keep on raising interest rates until they have inflation under control. So a little bit of surprise that the market reacts like that because this is our expectations that interest rates will keep on rising until we see proof that inflation is falling. Anyway, a bit of a rant there. Now, at a share price of $36.49, Altium's markup is $4.8 billion. Probably the one negative thing about Altium right now is the valuation. And one of the reasons I actually do want a bit of a correction in the market is we'll see companies like Altium, their valuation will fall a fair bit, and I think they'll become much better value. And 4.8 billion is a little bit frothy, just in my opinion. Now onto the revenue, profit, and operating cash flow for Altium. Revenue 220 million, profit 53.6 million, operating cash flow 72.5 million. Now, these numbers are straight from Altium's annual report or their financial statements. I actually went to a few websites just to have a look at some of the numbers, other numbers for Altium. And funnily enough, a lot of other websites gave completely different numbers than what I saw in the financial data that Altium did release. I'm not sure why that is. And some of those other websites are ComSec, Guru Focus, but Ticker, TIKR, had exact same numbers as the financial statements. So I am relying on Ticker here for all my financial numbers, including revenue, profit, and operating cash flow. But those numbers come straight from Altium's financial statements. Now, earnings per share is 42 cents. So just compare the earnings per share to the share price, and it is almost 100 times. The share price is almost 100 times earnings per share. So PE ratio is getting up there. We don't want to see PE ratio too high because valuation does matter. So even though Altium probably is a high quality company, you still have to look at valuation. I don't think some investors actually do that. They just think this is a high quality company. I'm just going to buy it no matter what. And we have seen instances in the past where share prices of high quality companies just go sideways for many, many, many years because of the valuation of the company is way too high. Now onto the revenue growth over time, and this is from Ticker, so that's why I mentioned Ticker before. And using their data for this slide. I sometimes will use Guru Focus. Even ComSec has pretty good website. Their platform's pretty good when you want to look at these sort of things. But I think their data only goes back 5 years. I like Ticker. I like Guru Focus. I have 30 years of data for Guru Focus. Ticker, I think you can go back a fair way as well. But this is just looking at revenue growth over the past 10 years. The main thing I'm looking for here is revenue growing through time consistently. I don't need revenue to grow every single year. And in fact, we did see revenue go backwards for Altium between 2019 and 2020, and then sort of slightly go up in 2021, but it's taken off again. So I'm looking at trend going up through time. If you calculate the compound annual growth rate in revenue for 10 years, 5 years, and just the previous year, which is not really compounding, we see numbers above 10% generally. Over the last 5 years, only growing at 9.5%, but that's generally about 10%. Over the past 10 years, revenue has grown at 13.6% per year. In the last year, 22.5%. So these are the sort of numbers I am looking for a high quality company. And there is perception, not perception, there is that thought, because this is what management have told us, that revenue will grow substantially over the next 5 years, because Altium has given us some guidance and they expect revenue to be approaching $500 million. I think it's $500 million, but I've got that slide, that particular revenue expectations later in this video. So these are the sort of numbers I am looking for an investment in a company for the long term. I want to see these numbers continuing to go upwards, and I think we will see revenue for this company continuing to go upwards from here at least 10% per year. Now, one of the reasons I really look at revenue growth compared to, say, profit, operating cash flow, is because when you look at income, which is profit, and cash flow from operations, you're going to see a lot more lumpiness. And this is definitely true when we look at Altium's profit and operating cash flow, particularly the profit over the past 10 years. You can see spikes in profit and then significant decreases of profit from year to year. And that's one of the positive things about revenue, is you don't get a lot of lumpiness there for most companies, unlike these two things. So we still want to see over time profit and operating cash flow increase through time. And for Altium, we exactly see that. Now, I'm just going to quickly look at Altium's operating cash flow statement. And then in the next slide, we'll look at the balance sheet. I'm not going to even look at the profit and loss statement, but I will look at profit and loss statement when I look at a company's financial results. Now, the first thing I always look at is going to be revenue. I'll take a quick look at revenue, and then I'll go straight to the operating cash flow and then cash flow statement, and then work my way backward. So what I'm looking for here is operating cash flow, and I want to see operating cash flow increasing through time. And for Altium, we saw operating cash flow increase 17% from 61.7 million to 72.5 million. I'm also interested in cash flow from investing activities. So I'm looking here for property, plant, and equipment, which is capital expenditure. For Altium, that is quite low, just above $1 million. Other things here I'm looking for are payments for investments, so acquisitions, proceeds from sales. So Altium did divestment of tasking, and they received a fair bit of money for that last year, 85.8 million. Also looking at cash flows from financing activities, dividends pays. Also very important here is lease liabilities. Now, in my opinion, lease liabilities belong in the cash flows from operating activities for some companies, particularly retail companies. So it's very important to look at lease liabilities for those companies who are renting their space. So for example, retail companies. And then of course we get to a cash flow. So the best of free cash flow. So the best way to find the free cash flow is you take the cash flow from operations and minus the capital expenditure, which is payments for property, plant, and equipment. Now, because Altium doesn't spend a lot of money in capital expenditure, the net operating cash flow from operations, net cash flow from operations is the main number I will look for here, because that is a fairly good proxy for the free cash flow. And the cash on hand at the end of the year is approaching $200 million for Altium, and that is a fairly high number. And one of the reasons I like to see a lot of cash on hand for companies is that gives the management of a company a lot of flexibility, particularly with capital allocation decisions. Do they do acquisitions, share buybacks, dividends, research and development? And the main thing is acquisitions. So this gives Altium a lot of potential to acquire companies that could be very beneficial for the company in the long term, or maybe research and development, creating more products, more platforms, that sort of thing. So I do like companies with a lot of cash on hand and minimal debt. The operating cash flow is not the end of the story here, because a company might change their inventories, or the receivables might be different, or payables might completely change. And this is really important. For instance, if a company significantly increases the inventories from one year to the next, that is a significant cash outflow. And this will become apparent when I do a video in the next week on Revel. They had a significant increase in inventories, and that affected the operating cash flow for the year. So once I finish with looking at the company's operating cash flow from the cash flow statement, I will then go to the balance sheet and focus on changes in working capital, and really focus on inventory changes, trade receivables, and trade payables. Receivables and inventories will be found in current assets, and trade payables will be found in current liabilities. Now, to determine working capital changes, you can also just focus on changes in total current assets and total current liabilities. So when you see inventories actually decreasing or trade receivables decreasing, that's actually a cash inflow. If you see it increasing, that's a cash outflow, and complete opposite for changes in current liabilities like trade payables. If you see that decreasing, that's actually a cash inflow. So when we look at Altium's changes in inventories, it's actually down $700,000. But inventories isn't really a factor for this company because they don't have a lot of inventories, but they do have a lot of trade receivables. In fact, in 2021, it was 57.3 million, but in 2022, it was only 52.5 million. So it was down almost $5 million from 1 year ago, and that's actually a cash inflow. And you have to subtract that from the operating cash flow, and same is true for trade and other payables. But for Altium, that was only down $800,000, and that's actually a cash outflow. So what you have to do here is take into effect the changes in these working capitals and adjust the operating cash flow. And when you do that, the operating cash flow for this company is about 10%. So a little bit lower than what we did see in the operating cash flow from the cash flow statement. Now to something that really has me intrigued about Altium, and that is the projections or the forecast this company has for the next 5 years. In fact, it's 4 years to the end of 2026. This is something the management of the company has done over the last 5 to 7 years or so. Now, the last time I did this was to the end of 2020, if I remember correctly, and they didn't hit their forecast, but that's okay. They got near it, and they were affected by COVID-19, but they do have, they are expecting significant growth to the end of 2026. So right now, revenue is $221 million, and they expect revenue to be $500 million by the end of 2026. They also expect margins to increase. So right now, margins at 36.7%, and they expect margins to increase to 38 to 40%. And if they can hit the revenue targets and the underlying margin targets, that means EBITDA will have increased from $81 million to $200 million within 4 years. And if they can hit that, that would be significant for this company. But even if they do hit those targets, this company will still be valued quite highly, even if the share price goes sideways over the next 4 years. The company also released some guidance for financial year 23, and they expect revenue. And I think one of the reasons why the share price did increase 20% on the back of these results was because of the guidance they also gave for 23. And they expect revenue to grow a further 15 to 20% to between 255 to 265 million. Underlying EBITDA margin to be between 35 and 30%, 7%. And they also expect both of their businesses, the electronic design software business and the engineering cloud platform business, to grow substantially in the next year as well. The design software to grow between 15 and 18%, and the cloud platform to grow between 20 and 30%. And of course, their aspirational targets for financial year 26, total revenue of 500 million, underlying EBITDA margins between 38 and 40%, and 100,000 software seats on subscription. I think Altium is a high quality company. There's little doubt about that, in my opinion. Now, you could argue with me that Altium is not a high quality company for some reason, but the revenue of this company has been growing at a consistent rate over the past 10 years, and based off management projections, and they could be a little bit too aspirational. Who knows? Maybe they don't hit those targets, but at least they have those targets. At least they are aiming for something. And even if they hit those targets, I believe that Altium still could be, their valuation could be a little frothy. So, for example, they are expecting to hit $500 million in revenue, and at a margin of 50 or 40%, and that's EBITDA. That means EBITDA can be expected to be 200 million. And if we have an EBITDA of 200 million, profit should be significantly lower than that, because they have to pay taxation. They will probably have a little bit of amortization, maybe a little bit of depreciation, but definitely taxation. They'll have to pay some taxes. So we could expect maybe profit to be 150 million. So right now, the valuation, the market cap of Altium is nearly $5 billion. So that means if the share price goes sideways from here, the P ratio of Altium will still be above 30, almost 40 by 2026. So that's with the share price just going sideways from here. So that means for the share price to increase from here, the market has to maintain this forward looking of significant growth in this business over the next 4 years. It can definitely do that, but there's a lot of risk with that. So that's one of the reasons I want to look at valuation. And for Altium right now, the PE ratio is really high, so 88.3. Price to sales ratio is really high, 22.2. Price to operating cash flow ratio is really high, 67.3. And if we see a significant correction in the market, Altium is one of those sort of companies that we might see the share price fall by a lot. So even if the share price halves from here to say $20 or just less than $20, the PE ratio will still be fairly high, but there'll be more room to grow from here, particularly if the company hits those targets in 2026. So you do have to be careful when it comes to valuation. And the perfect example of this was Microsoft about 20 years ago. Now, the valuation of Microsoft during the tech bubble was really high. PE ratio was really, really high. And then over the next 5 to 7 years, the share price of Microsoft just went sideways. So the valuation of that company had to catch up to the multiples of the company. So there was no multiple expansion. We needed to see financial expansion in Microsoft, just like we might have to see with Altium. We might have to see financial expansion to catch up to the valuations of the company right now. We might not see multiple expansion. In fact, we might see some multiple contraction from here moving forward. So what I want to see in any company is a possible financial expansion. So that's definitely what I want to see. But I also would like to see the possibility of multiple expansion as well. And I have a hard time seeing that with Altium over the next 5 years, simply because the company right now is a little bit frothy when it comes to its valuation. Now onto the charts for Altium, and the first chart here is the 18-month daily chart going back to February of last year, and a really interesting chart. So no distinct uptrend in the share price from 18 months ago, but we have seen share price reach a high of $45 and lows on 2 occasions of $24.50. The first low was back in May 2021. Second low was back in June of this year. So a lot of volatility in the share price over the last 18 months when it comes to this company. And the main reason for that volatility, again, I think is because of the valuation and also the lack of growth when it came to this company over the last few years. So that lack of revenue growth, I think there was a lot of indecision about this company in the market. But this financial year 22 results, I think we have seen the bulls come out and they're a little bit more excited about this company. And that's why we did see the share price increase 20% on the back of this. And the share price actually kept on increasing the next 2 days, but a little bit less bullishness in the next 2 trading days. In fact, on that last trading day I have in this chart, there was a dojo. So the bulls and bears were fighting and there was no winner on that day. The 2 previous days, definitely the bulls were in charge of the share price. Now, I won't call this a definite breakout in the share price. Share price got to about $37. Last time we saw the share price that high was back in February. So we could almost say this is a 6-month high in the share price. But because of the valuation and because of the volatility we do see in the share price of this company, I think there can be another correction in the future. And if I do see the share price move towards $25 in the future, and I do have my doubts that it will happen, that could be the time to take a position in this company, particularly if they are able to hit those financial year 26 targets they do have in place. Now, if you look at the longer term chart here, and this is the weekly chart going back to 2014, the time to buy this company was way back in 2014 when they really started their growth cycle. Because at that point in time, they were undergoing financial expansion, so growing their profits, growing their revenue, growing their operating cash flows, but they also underwent significant multiple expansion. And that financial expansion and multiple expansion occurred over the following 5 years from 2014. But over the last 3 years or so, the share price has been volatile, but really has been going sideways. So no real movement in the share price up or down. So no trend to the upwards or downwards side. So a lot of indecision in the market around Altium. And I think, again, that indecision is around the valuation and also because the lack of growth we did see over a 2-year period. So right now, I think it's very important that the company can hit those targets and maintain that story moving forward, because if they show that those targets are going to be very difficult to hit, I think we might see Altium's share price under a lot of pressure. But definitely, Altium is a high quality company. The only thing I have against this company right now is that valuation. That's all I have for this video, looking at Altium and their financial year 22 results. This company has been growing their revenue at least 10% over the past 10 years. And even though financial year 20 and financial year 21 growth was on the low side, looks like they have returned back to a high growth scenario with their revenue growing at 22% in financial year 22. And if the company can meet their targets for financial year 26, we're going to see significant growth in this company over that time period. The only question when it comes to this company is the valuation right now. So that's the only really thing holding me back from taking a position in this company. But if we do see a lot of weakness in the share price, if the share price pulls back to $25, I think that could be a good time to look at buying some shares in this company. If you want to leave any of your thoughts in regards to Altium, if you disagree with me, I'd love to hear your thoughts on why. So leave it in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.